Hello and welcome to the weekly outlook. Coming up to Easter, there's not a great deal of market moving data coming out on the calendar, although there are some high impact alerts. They're based around manufacturing and construction, which isn't really what the central banks are looking at. So the overall direction of currencies isn't really going to change. What we really need is to find a catalyst that we can use on a pullback for a currency pair so that we can get back in for the big data alert, which is on Friday, the non-farm payrolls. Now, the only one that I can really see that's worth or potentially got the tools that we need is the euro against the US dollar. As you can see, we had that big pullback from the FOMC last week, and we've had this area of resistance which it's failed to break through on several occasions. Now, on Tuesday, we've got Euro CPI coming out. It's expected to come out in line with expectations at minus 0.3, but we have had some decent readings coming out of Europe over the past couple of weeks. So what I'm hoping is that we're going to see that come in better than expected and get a little bit of a rally on the euro by Tuesday. Now that rally might only just push it up to 11000, or it might just push it through up to the 11050 level. But the important thing to remember here is that we've got an area there, that 50 pips, where we can take a trade with a little bit of conviction on the downside, because coming into the non-farm payrolls, we know that the CPI data, the employment data, is what Janet Yellen and the Fed are looking for before they raise interest rates. Now, the average hourly earnings is expected to increase. It did fall last time from 0.2 to 0.1. It's expected to rise up again to 0.2. However, the employment figures are actually expected to drop down from 293 to about 250. As long as it stays above 200, it's good growth. Okay, so anything above 250 is going to show that it's above expectations again, and whatever the market's got priced in, potentially there's more room for the US dollar to strengthen there. So what I'm going to be looking for is on Tuesday is to try and get that pullback from the CPI readings from the euro, round about to this, between this 1100 level and that 110050 level, with stop losses round about the 11070. Okay, if it goes through there, then I'd suggest that it's probably going to rally back up to about 11150 before it drops. So I would look to get back in at that price and save myself a 70 pip drawdown and just look to re-enter for a sell at 1170. We are still expecting the euro to come down to parity over time, so even if the figures don't come in as we would like them to, the chances are it's still going to end up dropping back down to 104 in the coming weeks, certainly down to this previous low. So that's the trading outlook that I've got for this week. The only other currency that I may potentially look at is the New Zealand dollar. We've got GDT coming out around about Wednesday afternoon. I would look for this. Earmarked at the moment, I've earmarked a buy trade around about 7540. Okay, it's been down just short of my target. I think my actual target is about 7533 to buy, and we're looking for that that lift back up to the 78, potentially the 8000 level. The New Zealand dollar is showing some strength, and we have got a nice steady pattern emerging here, which is consistent with an upside trend. So looking for a buy round about there. If the GDT comes in slightly better, then that could be the lift that we need. So just looking to see if the New Zealand dollar will drop down to that 753 before that GDT comes out. If the GDT comes out poor, then we could expect it to come down to about the 7.4 area again, and that's where I'll potentially look to buy it back. But at the moment, I've got 7533 earmarked. Okay, thanks for watching, and I hope you can make some pips for those trades, and I'll see you next week.